Are you ready to take your first steps towards financial freedom by investing in property? Whether you're a first-time investor or you've started your portfolio but need some help continuing to grow, 2022 REB Buyers Agent of the Year and Rising Star finalist Lachlan Vidler and his team at Atlas Property Group are here to help. As experts in property investment, Lachlan and his team are ready to help you take your next step in growing your portfolio. By completing the research, sourcing and negotiations, Lachlan goes the extra mile to find you a high-performing investment property. Visit atlaspropertygroup.com.au to book in your discovery call absolutely free of charge.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Good morning, good afternoon, good evening, whatever time of day you are listening. Welcome back to a brand new episode of the Smart Property Investment Show. I'm Grace Ormsby, and one of the things that I love most about this show and this network is not only that we get to talk to people week in and week out about their investment portfolios and their stories and how they've gotten to where they are today, but we also get to check back in on guests that we have previously had on the show. And today is one of those days. You may recognize her voice if you've been a long-time listener of the show from the episode How This 33-Year-Old Nurse Plans to Secure a Passive Income of $150,000 per year. But if not, we're going to run through it all again. Anna Woolaston, welcome to the show.
Hi, Grace. Thanks for having me.
Oh, you're so welcome. I'm so excited to have you back on because I know Maya did this episode with you last year. And I think anyone who is listening along, you probably want to go have a listen to the previous episode that Anna did do, because it was pretty much 12 months to the day of this episode going live that you did last appear on the show, Anna. But a lot has changed for you. I think it's fair to say, considering at that point in time you were still working as a nurse. I know that's changed a little bit for you now, but we're going to get to that a bit later on in the episode. But before we do, just to recap, how did you start building your property portfolio? And talk us through that point to sort of the episode last year that you did, because, you know, that was still pretty much midway through the pandemic. And, you know, a lot of thoughts have changed since then and a lot of things have gone on. So we'll bring everyone up to speed who maybe hadn't heard the last episode or needs a recap, and then we'll go from there.
Yeah, sounds good. Well, first of all, I'm now 34, so I guess that's changed. And yeah, so back during that episode, we're still living in our apartment in Harris Park, which I purchased before I met my now partner. So it's a 2-bed, 1-bath, 2-car space, which, yeah, is our principal place of residence. In the previous episode, I'd mentioned that the prices had probably gone down a little bit in the area, but we've started to see some recovery. And I think that it's probably around the purchase price, back around the purchase price now again. So that's been a good change since the last time I was on the show. We also have a Canberra property, which is one of our investment properties. So it's a 4-bed, 2-bath, 2-car space, which has continued to see some growth since last year. So we think the valuation for it is probably around $975K, which is really strong still. So we purchased back in 2019 for $650K. So it's ticking along really nicely.
Definitely can't complain with that, can you? Canberra has done really, really well the last couple of years.
It's really had some really strong growth. So we really timed that purchase very well. The rental income on that one has also increased a little bit since last time. So that's really helped with our cash flow for that property as well. So we're receiving $597 per week. So almost to $600 per week for that one.
Surely you can round that one up.
Yeah. It's a strange amount, but our property manager went with that. So that's okay. And then we obviously still have our house in Adelaide, which Investor Kit helped us to purchase. So just to recap, it's a 3-bed, 1-bath, 1-car. We purchased in April 2021 for $450,000. And I think it would be valued at around $585,000 at the moment. So again, really strong growth. We've also had a recent rent increase on that property as well. So yeah, really happy with how our portfolio is performing. And then since last year, when I was last on the podcast, we've actually made another purchase with the help of Investor Kit. So we brought a house in Toowoomba, a 3-bed, 2-bath, 2-car, purchased in December 2021 for $438,500. And I think that would be estimated around $470K at the moment. So already seen some growth in the last 6 months on that purchase as well.
That's all looking pretty healthy. I think that's a pretty good way to put that, Anna. But why Toowoomba? Because, I mean, we've seen so many people going up to Queensland lately, and there's obviously a lot of reasons why. A lot of them are lifestyle factors and all of that. But even obviously last year for you, it was a really good purchase from an investment point of view. What was it about Toowoomba that you really liked?
Yeah, so for this purchase, we really wanted to get a strong balance between looking for areas that have growth, but also balancing that out with some strong yields. So with that purchase, we're able to get a 4.5% yield, which is a bit stronger than what our Adelaide purchase was, for example. We also wanted to diversify. So obviously we had ACT, New South Wales, South Australia under our belts, and adding Queensland is just a nice diversification play as well, because as we know, not all markets move at the same time or same pace. So just diversifying the risk across another state was also something that we welcomed as well.
With that, Anna, where are you at now in terms of what your portfolio is valued at, if you don't mind me asking?
Oh, I think the value would be close to 2.6 million, which sounds crazy, but yeah.
Yeah, it's pretty good. So then I do want to, as a follow-on from that, considering the last headline that we used was how this 33-year-old nurse, now 34-year-old ex-nurse, plans to secure a passive income of $150,000 per year. Where are you sitting at in regards to achieving that goal? Because I do feel, we talk a lot on this show about the importance of goals and goal setting. And I'd love to hear, how close or how far you feel like you're away from that at the moment.
Yeah, I feel like we're really on track, which is great. We use a platform called Game Plans to help us kind of project into the future and put purchases in and make plans in that way. And as far as I can tell, we're on track to sort of achieve that goal, definitely. I'd like to make another 1 or 2 purchases over the next 5 years or so, and then just let time do its thing and just let the portfolio grow and the rents increase and then reassess us and keep going, I guess. I think I certainly wasn't expecting to change careers. So circumstances do change and you have to change the goals and evolve with circumstances changing. But yeah, I think we're still on track, hopefully.
We're going to get to that career change in just a second. But before we do, I think we talk as well, SMART goals are so important, making sure that they're measured. That's one of those aspects of that. And so what is the time duration that you're working to when it comes to this goal? Because it does feel like a long-term goal and a great one at that.
I would definitely like some options to move to either part-time work in the future or potentially retiring a bit earlier than the standard sort of age. So we really would like to potentially retire at 55. Yeah, so that's kind of the goal that we're working towards. And we keep all of our projections quite conservative. And then if we do better than that, that's just an added bonus.
So you've still got 21 years for that, Anna. I mean, it's exciting, to be looking that far ahead and knowing that it's a conservative goal to be reaching. That's got to be pretty reassuring.
Yeah. And I guess you just, in all investing and particularly in property investing, you've just got to allow enough time and get in nice and early to let compounding growth do its thing and see through a few market cycles and really reap the benefits of that time.
Speaking of market cycles, that's another topic that we're going to be touching on today, but we're going to take a quick break. We'll be back in just a second with more from Anna Woolaston.
Ever wondered how you can invest like the top 1% of Australian property investors? Henderson Advocacy has been at the forefront of helping everyday Aussies improve their financial freedom. So if you're a savvy investor or someone just starting out on their property journey, give Henderson Advocacy a call today. Head to www.henderson.com.au. Don't invest alone. Invest smarter.
Welcome back to this episode of the Smart Property Investment Show. I'm joined by Anna Woolaston, who last time she was on the show, she was a nurse, and you've been in that career for a while now, Anna, but recently things changed and it sounds pretty exciting. And I love that you've fallen into property. You know, you started building a property portfolio and then you ended up in it as a career. But from your own words, I'd love for you to tell everyone a little bit about making the switch and what actually happened and drew you in to the property circle to make it a full-time job for you.
Yeah, so now I'm working as an associate buyer's agent with the InvestorKit team. So definitely a bit of a career switch from nursing. So I've been a nurse since the age of 18, so really long career in nursing. And I think I always imagined trying out something new and something else. I think that unfortunately the pandemic probably accelerated that timeline a little bit, because I feel for all healthcare workers, like the last 2 years have been really tough. So I think I was ready for a change earlier than anticipated. And yeah, it sort of all came about. I'd been thinking about a career switch into real estate for a few months, and I'd kind of been starting to research how to make that change and what steps I would need to take. I always imagined being on the buyer's side rather than the seller's side of the transaction. And so, yeah, I was talking to Arjun, the head of InvestorKit, and we were talking, I think, about a depreciation report for our Toowoomba property. And I just threw it out there and I said, Arjun, I'm really considering a change into real estate. Like, what would you suggest I do? What steps do I need to take? This was, I think, the end of 2021 or early 2022. And so he guided me, gave some advice, led me to the courses that I would need to complete, which I've now completed. And he shared some resources with me to get a feel of whether it could be a good fit. And we continued to talk, and now I'm obviously working for InvestorKit.
And here you are. I am curious, a career change in itself is a really, really daunting prospect. Oftentimes, even when people don't have a lot of assets behind them or, something that they need to be earning income to be supporting. People are doing that all the time with families and everything, but then you've got a $2 million property portfolio that's probably, I'm guessing, going to stay front and center of your mind when it does come to, earning an income and having a stable place of employment. Did that factor into your thinking at all when you did make the switch?
Yeah, definitely. And, I feel very privileged that I had the support of my partner who encouraged me to make the switch as well. And obviously we had his income to help support if there was a break between working. I think that's one of the reasons for building the property portfolio and creating wealth for ourselves, is to have freedom and choices and not be reliant on a career that you might not be enjoying so much, and to have the freedom to sort of try something new, just try something that, you're passionate about and something that you want to give a go to. And when you don't have those financial buffers or those multiple streams of income, that's a much harder choice to make.
For sure. On this show, I especially love talking to female investors and seeing their journey, because I do think it's really, really important. We don't get nearly as many female voices in the property space as we do male ones. And that's just sort of, been part and parcel of what it is for so long. But I love now that you've taken the plunge into, the professional side of property investing, because it's very similar to the investor side in that we don't have as many female voices out there. Does that weigh on you at all? Like, is it something that you think about at all day to day when you're doing your work, or do you not actually see it as, an issue or a problem that is out there?
Oh, yeah, I definitely have made the same observation as you, Grace. There's definitely a few more male voices in the property investment space than female voices. And I was reading the recent CoreLogic 2022 report, Women in Property. And of course, the section that piqued my interest was the property investing space. And unfortunately, women do have a lower ownership proportion compared to men. So I think women, it was 29.1% observed investment property ownership. And for men, it was 36.4%. So there's definitely a gender gap there. I think it is closing. And I feel very privileged that there was definitely female voices out there in the property investment space before, that I could look up to and hear about. It's interesting. We actually found InvestorKit after the SPI podcast that I think it was Arjun, Lorna Wang and Phil did together. And I think the reason that episode really resonated with me so much is because I could see a lot of myself in Lorna. You know, she was a solo female when she made her first purchase. She made a couple of similar mistakes to what I made. And then she, you know, worked with InvestorKit to build that property portfolio further. And so I think with everything in life, if you can see somebody who sounds like you and looks like you, then it's much easier to imagine yourself doing those things as well. So if I can be that person who has a similar voice and a similar look to other female property investors who are thinking about, you know, moving into this investment space, then that would be awesome. I think I'm very privileged. There's already lots of female investors out there and they're sharing their stories through podcasts and books and things like that. But I think, unfortunately, there's still a bit of a gap and we've got a little bit of growing to do before it's an even gender balance. Yeah.
I hope we're inspiring some people with this episode today. Anna, that's, you know, really lovely for you to be saying to people. And I think to everyone who is listening along, if you are a female investor listening along, put yourself out there. We'd love to be hearing from you, editor@smartpropertyinvestment.com.au. We're always looking for more investors to come onto the show. And we want to be, you know, showing the full spectrum of people that are out there investing, because everyone's got a different story. Everyone's got a different goal, a different strategy to achieve what they want to achieve in life. And the more of those voices that we can amplify, the better. And we're going to keep doing that on the Smart Property Investment Show. We'll be back in just a moment with more from Anna Woolaston.
It's time to get help. Interest rates are increasing. Inflation has hit an extraordinary 5.1%, and the chance to secure a golden egg property is getting narrower by the day. Dragan from Buyers Agency Australia has been presenting the facts and helping property investors make smarter, well-informed, educated decisions in property for years. So what are you waiting for? Get in touch with Dragan today at www.buyersagencyaustralia.com.au. Invest with integrity.
Welcome back to this episode of the Smart Property Investment Show. I'm joined by Anna Woolaston. Just before the break, Anna, you were talking about, you know, the importance of female voices in the investment space, and it is something that I completely agree with you on. And you actually brought up a really good point in the break that I wouldn't mind raising with you again on air, if that's cool, around females who are a bit more hesitant to be getting onto the property ladder. And for you said, you know a few people in your circle that are hesitant, and it's because they haven't found a partner yet or someone to be buying a property with. Buying a property is a huge investment, and I can understand why, you know, it's much easier if you've got a second person in the mix. But what are your thoughts on that? Because it is a tricky one for a lot of people. And, you know, whether it's a conscious or unconscious bias or obstacle or hurdle that people are facing, because it's not even just, I think, for females, you know, it's also something that a lot of men would be grappling with as well. But is it an issue? Is it something that we need to sort of get over and start looking alternatively about how we do think about property purchases?
Yeah, I think so. So like I mentioned, a few of my friends have talked to me about waiting until they find a partner to buy with, and I just think that there's a huge opportunity cost in that. And it's very reliant on, not everybody ends up finding a partner. And I think that there's a lot of missed opportunity in that if you are able to enter the property market, like I mentioned earlier, time and compounding growth is a key ingredient to successful property investment. So as scary as it can be, because you're reliant on sort of just that one income rather than two, I get that, definitely. And I was definitely a bit nervous when I made my first purchase solo, but it's definitely been worth it for me. And hopefully people feel more confident to buy a solo female or solo male in the future, definitely. I think there's also options, you know, there's more people buying with friends these days. There's more people buying with family members. And that's, you know, there's lots of different ways to get onto the property market as well. Yeah.
I've actually just written that down. Time and compounding growth equals opportunity cost. Well, so that's probably not how you put that equation, actually, is it? That's not maths. Opportunity cost would be, well, it just doesn't exist if you don't have the time and compounding growth elements, do you?
Yeah. So you could be losing years and years waiting to find a partner that you want to buy with. That could be years. I mean, imagine if you waited until the end of this latest property growth cycle, you would have missed out on thousands and thousands of dollars. So yeah.
I need to go and work out my equation because it is not right. I've got all the aspects there. I need to figure out how to actually put that concisely into words. But some great advice there, Anna. Thank you for that. And I would love, speaking of advice, to pick at your brain a little bit more and see what the last year has actually brought for you. And I'm curious if there's anything from your nursing career that you actually see as translating into the property space, because there's so many people out there that are in, at the nursing profession and anything medical. They've had a couple of tough years and they're probably, looking to put some of their money into real estate and maybe don't know where to start. But there's got to be some lessons that you learned in that space that you can be transferring.
Definitely. I think as a nurse, and I was actually a cardiac nurse, so I was involved in a lot of cardiac arrests during my time as a nurse, and it's just important to be prepared before a cardiac arrest happens, to know what you're going to do if it does happen, and just to make quick decisions as well. I think sometimes in property, you just have to make really quick decisions. And the way to enable you to do that is to be as prepared as possible before you're in that situation where you need to make a quick decision. So I see some similarities there. Obviously, a cardiac arrest is life-threatening, so it's a bit more serious than property, but there is some parallels there around making quick decisions, being as prepared as possible, doing lots of research and understanding before you're put into that difficult decision time.
I love that analogy there. I can see why that works. So then, since you have been working in the buyer's agency space for the last year, you were an avid investor before all this, you had it pretty much worked out. Has there been things that have surprised you since moving into the space about, are there lessons learned that you wouldn't have realized if you hadn't taken that plunge?
Yeah, definitely. I mean, gosh, my learning in the property space has just accelerated so much. I mean, obviously, when I was nursing full-time, I only had so much time and energy to spend to learning about property. Now I get to spend all of my work days learning about property and understanding property better. So, my growth and knowledge in that space has definitely accelerated hugely. I think being a client of InvestorKit and now working for InvestorKit, I just see I see all the behind the scenes process and how much thought and research and data goes into the decisions that we help clients to make and the thought behind each purchase. And so I think I have a greater appreciation for all of that, because as a client, you just see the end result mostly. You don't see all of the hard data and research and work that the team goes to. And I think it's probably, it's made me really thankful that we did use InvestorKit for our 2 investment property purchases, because working full time, there's only so much time and energy you can put towards, that decision making. So having a professional behind you who can support with that just makes a lot of sense to me. And when I was a nurse, my time was better spent doing overtime shifts or, being the professional that I was as a nurse and making money that way, and then outsourcing to a buyer's agent, to an accountant, to a mortgage broker to do all of those hard yards for me and put all that time and energy into, finding the right property and having the right loan structure. So I think that's something that I see a lot of value in now. And perhaps when I was like 24, I tried to do it all myself, but there's so much value in professionals who specialize in their area and they can really help support, and I know that the SPI podcast talks a lot about having that professional team around you, your buying team, to help support. And I think that I really see so much value in that now.
If you could, Anna, can you lift the lid a little bit? I'd love to know how much time goes into that due diligence process. You said it yourself, when you're doing it yourself, it is hard, and people would be trying to spend as much time as possible on those due diligence decisions and that research. But how much more do you do when you're working in it professionally? You know, how much time will you spend on a particular client's case or, you know, looking at a particular house or property for them? Can you give us some insight just into just the time period? Because I don't think people fully realize that.
Yeah, and it's not just me, like there's a whole team of people working for clients to do all of these checks. So obviously there's the obvious checks like flood zones, bushfire zones, power lines, things that most property investors do know to check for. But then our research team also looks into, well, what sort of location results in increased days on market for particular properties? So, you know, being opposite a school, does that lead to increased days on market? Do we want to avoid being opposite a school for that reason? So there's like a lot of extra checks that I just didn't know about until I started working for InvestorKit. And we also have multiple people doing these checks as well. So we've got like an acquisition team that do the initial checks, and then the buyer's agency team will do another check. And so there's lots of, I guess, safety nets to make sure that we're not missing anything that could potentially make the property less of a good investment for our clients. Yeah.
An interesting snippet there about the schools. Has it changed the way that you're going to approach your next investment?
Yeah, I mean, I think I just get an insider view of it now. So I guess because we utilised InvestorKit for our last 2 investment property purchases, we'll just, continue to hopefully make some good choices for the next 2 as well. But it did make me reflect on our Canberra property, and we probably made a couple of mistakes, or perhaps we could have looked at a few extra things that we didn't look at when we purchased the Canberra property. So we have, you know, we're not directly behind a highway, but there's one sort of nearby. And there's a few little things that, I mean, they're not big deals. Obviously, our Canberra property has still performed very well, but with each purchase, I think you just learn more and more. And now being on the buyer's agency side of things, I just, I have such a better understanding of what in the data, you know, we're looking for and things.
They do say practice makes perfect when it comes to, you know, everything, and property investment is exactly the same, although you can be pursuing that perfection for a very long time given market conditions and the fact that you're at the mercy of that, Anna.
I think the flip side of that is that when you're trying to do it yourself, there can be a lot of analysis paralysis because you're not really sure, you don't have all that research and data behind you to help you make a really confident decision sometimes. So, and analysis paralysis in itself can have an opportunity cost because you're spending so long, you know, double checking and analysing, and so there needs to be a balance, I guess, as well.
Speaking of balance, we've seen the RBA come out this week trying to get a little bit more balance in the Australian economy. They've bumped up rates by a pretty substantial amount. It's fair to say 50 basis points from 0.35% to 0.85%. And I'd love to get your thoughts on what this means, because as much as it's been a shock for a lot of people, it's a fact of life, unfortunately or fortunately, whatever way you want to be looking at it, that the Reserve Bank of Australia does make these decisions. And it's not the first time they've ever lifted rates. It's certainly not going to be the last. But it has, you know, caused probably some of that paralysis in a fair few people over the last couple of days. What are your thoughts on what this rate rise means and how it could, you know, impact the property market moving forward?
Yeah, I do empathise for people who feel like they're going to really feel the effects of this rate rise and really it's going to impact their budget hugely. Like that must be a horrible feeling for them. I guess personally, you know, we try to purchase in really affordable markets, and I think that helps to perhaps alleviate some of the impacts of the rent rises. You know, it seems like it's being felt most in Sydney and Melbourne, which we know are quite unaffordable markets for the population. And also, I think across Australia, we're still in a rental crisis. And so I think that will put pressure on rents and they will continue to rise, which will, as a property investor, alleviate some of the rate rise costs as well, because, you know, rents will increase over the next couple of years as well, I think. And also, I guess, just like I mentioned before, having properties across different states will help with that diversification. So if one area is impacted more than the other, well, it's kind of balanced out across our portfolio, which helps. I think also because when I first started buying property, rates were, I think the RBA was closer to sort of 2% at the time when I first purchased. And so my rates were like 4% when I first bought. So I guess I've experienced that higher rate already. So it doesn't feel as scary for me.
Mm-hmm. It's some really good points you make, because it does sound like when you do your due diligence and you do your research and you're properly prepared, most people out there, especially investors who have gone into this with a clear head and some good research and planning behind them, are going to be fine. It's, just another bump in the economic road. And it's always going to be like this. And good property investors know that the market is cyclical and things change and things happen. So if you're prepared, you're going to be fine.
Yeah. And I think also we have some financial strategies, like we have an offset account, which we put a big emergency buffer in. We have never actually hit our max borrowing for each purchase that we've made. We've always sort of kept a bit of a safety buffer in there as well. So, but yeah, it is scary for a lot of people. And especially if you've only experienced property in the last couple of years when rates have been at historically low levels, I can understand if that's all you've experienced, why it would feel very scary. But just having those buffers and, like you said, making decisions with this in mind before you purchase really helps alleviate some of that.
Do you think then that it's still a good time for people to be buying?
Yeah, I think 2021 was definitely an unusual year where so many markets across Australia all increased. I think moving forward, it will definitely be more of a normal situation where there'll be some markets across Australia that are still seeing growth, and then other markets where they might plateau or come back a little bit. So I still think it's a good time to invest in property, and just doing the research, finding out the markets, looking at your own personal situation and where might be a good fit to add to your portfolio. So yeah, I think it is still a good time to buy. We are definitely looking at maybe purchasing towards the end of this year. We're just starting the steps of, talking to our mortgage broker and getting things sorted. So yeah, I'm personally still buying and personally still think it's a good time to buy.
Anna, it's been so wonderful to catch up with you today. Thank you so much for the time. Best of luck with the next property purchase and the career change. It sounds like it's been paying off so far. So again, thank you, and already looking forward to chatting to you next time.
Thanks so much, Grace.
To everyone who is listening along, we hope you enjoyed this episode. Please like or review us on whatever platform that you do listen to podcasts on. Reach out if you have any questions, editor@smartpropertyinvestment.com.au. We'd also love to hear from you if you've got a property portfolio that you'd love to chat about. We're always on the lookout for more guests on the show. Stay up to date with us on our website, smartpropertyinvestment.com.au, and on our social media, Facebook, Twitter, and LinkedIn. That is all we have time for today, unfortunately. But until next episode, stay safe and well wherever you are listening from. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
It's safe to say the property market has been red hot over the last few years, with some of the markets we've selected in 2021 rising over 40% in a 12-month period. It's very likely that if you're a property owner, your property has gone up 20% minimum in value in the past 12 months, and you have most likely accrued sizable equity that can be recycled and extracted to build your investment portfolio. With interest rates increasing, you might be wondering where to invest to maximise capital growth and cash flow in 2022 and beyond. Well, to save you time, energy and guesswork, award-winning author and regular guest on the Smart Property Investment podcast, Paul Glossop and his team at Pure Property Investment have outlined the top 30 affordable suburbs poised for strong capital growth over the next few years with sound cash flow. Grab your free Top 30 Guide to Property Investment guide today at purepropertyinvestment.com.